morning, everybody. What's going on? Today is Wednesday, December 21st, getting closer and closer to the holidays and the slowdown, possibly, of the market, right? We kind of know that we want to be mindful as we move closer to the holidays. Some people start taking off. Doesn't mean the market has to slow down, but it may become choppier to trade. So just be mindful of that. We're hump day, we're about halfway through the week, right? Wouldn't be surprised if people start taking off Thursday, Friday for Christmas in the United States, at least. I get it. There's plenty of people out there. You get all the winter holidays, all the holidays around now. But just in terms of the big one here in the States, right? The 25th does seem as though some folks may start heading out early. So, anyways, that's what I would say about timing and seasonality. Just the holiday season, right? Being mindful of that. Today, 10 o'clock, what do we see? Economic data is coming out. We'll be getting the consumer confidence numbers right here. That'll give us an indication as to, quite literally, how the consumers are feeling out there and whether or not the recession fears are looming and consumers are sensing that. At 8:30 tomorrow, we'll be getting final GDP, the quarter over quarter, and unemployment claims, and 8:30 Friday, the core PCE. So just things to be mindful of. Again, from an economic news perspective, I would say that PCE is probably the biggest deal on the horizon here, followed by GDP and then maybe consumer confidence today. All right, so that's kind of where I'm at from a news perspective. The news flow is not crazy as we start winding down here into the to the weekend ahead. What do we have the following week? Again, pretty quiet between Christmas and New Year's. Right, New Year's would be the first, and the market should be closed here. Do be mindful as well. Next week, this is just an advanced heads up. The market will be closed on Monday in observance of the Christmas holiday on Sunday. Okay, so no trading next Monday. Just gonna start putting that out there now because there's notoriously always someone who's like, oh, I thought the market was open today. What's going on? I woke up at whatever. Let's say you live on the West Coast and you got to wake up early. You can sleep in on Monday. All right. So that is that. Let's have a look at our stock-specific headlines here this morning. What is CNBC telling us that we should be mindful of? Stock futures rise, helped by Nike and FedEx earnings. FedEx was the original caller of sort of the recession fears. So I'd be interested to look at the FedEx chart and just see what was going on there. I haven't looked at it. I haven't read into any statements by FedEx and management from them. So I'd be interested in that. What else do we see? Mortgage refinance demand surged 6% as rates dropped to the lowest they had been since September. That's this one right here. What else? Stock-specific stuff. Elon Musk tries to explain why Tesla shares are tanking. I don't know if you've been following along on Twitter, but it's kind of funny. At the end of the day, it's a very, very simple reason. Shares go up when there are more buyers than sellers, and shares go down when there are more sellers than buyers. Those are the only two inputs of the equation. All right, and you can make all the arguments in the world as to why there may be more buyers and why there may be more sellers, and that is maybe why he's trying to explain things. But at the end of the day, it's a really, really simple formula. This is where it gets subjective, trying to explain away. Oh, there are more sellers because interest rates are higher, or I just dumped 3 billion dollars worth of stock, right? Maybe that has something to do with more sellers than buyers. Maybe no one's interested because they think management is, not properly doing their job, and the trajectory for the company is no longer as bright as it once was. So you can get into the nuance of why there may be more sellers than buyers, but at the end of the day, it's a simple equation. There's no reason to try to make it any more complicated than it is. Downgrade to Palantir from Wolfe Research says investors should sell before it becomes a sub $5 stock. Wow, pretty aggressive on that front. Sub $5 on the forecast. What else? NFL nearing rights deals, with Google's YouTube TV for Sunday ticket game package. Interesting. What else? Looking for stock-specific stuff. Downgrade to Starbucks says a recession could hurt consumer spending in 2023 from Jefferies. I've seen plenty of photos out there on the internet, the interwebs, if you will, of people just still shopping around, seeing normal stuff going on at the at malls, at shopping centers, at wherever you go, right? But the concern is not so much that you're seeing people, or the concern is not that you're seeing less people there. That doesn't seem to be a visual thing that we can um, see trickling in yet. It's really the amount of credit that's getting taken out and the savings that are being depleted. That's what's going on here. It's not so much that, sure, people are still there right now, but it's going to get really, really tough when the credit is like maxed out and there's nothing to pay it off with. That's when no one will show up. So, it's very doom and gloom, but possibly in 2023, you'll see those people start slowing down. So I wouldn't read into people still being out and about as a sign that, oh, the recession's not going to happen. People are still spending money. Just you wait. Just you wait. What else do we see? Biggest movers pre-market, Rite Aid, Nike, FedEx. Those are all earnings candidates. Dwayne Johnson, blah, 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 blah. FedEx plans more cost cuts as soft demand hurts profits. Wells Fargo ordered to pay $3.7 billion for past scandals. Here's why we see it as a positive. It seems like these big banks are always getting wrapped up in, oh, we realized that you did this in the past. Instead of doing something like 3.7 billion, right? It's drop in the bucket for Wells Fargo. Don't get me wrong, it's a lot of money. 3.7 billion is a lot of money, but it's a drop in the overall bucket compared to what's going on there. What else? Nike surges after topping expectations, so we'll take a look at maybe the FedEx and Nike charts and criminal charges for SBF on FTX. All right, that's it for stock-specific headlines. Let's see what we've got going on over here. Earnings calendar. After the close yesterday, Nike and FedEx. Seems like Rite Aid is a mover pre-market here as well. Saw a couple mentions of Rite Aid, and then, of course, we want to be mindful of Micron after the close today. That's going to do it for the remainder of the sort of holiday season, if you will. Things will be real quiet after Micron on Wednesday. With that said, let's dive on into our ES futures here on the beautiful, ever so lovely 4-hour time frame chart. We will get right down to business as soon as we see who's in the chat here with us this morning. So scrolling all the way on up to the top, we've got John Cardozo, INF, Nick Farrell, Hawk, Cy, I'm Petrick. We've got Mickey, Sleuth Trader, Nancy, SSR. We've got Jeep for Life, Pete and Repeat, absolute classic of a name. Love that he's here all the time. We've got Chloe, May, Live Better, Tunes, Ivan Lobis, Ryan Speed, Roger Tutt, Davey A. Ramus, Lioness. We've got Adasa. We've got Justin, Sharath, Raz, Cy C. We've got Jerry, Antonio, Chris, Lee Floating on a Lake, Todd Scholes, Empower, Big Stick. Cipriano is in the building. We've got Stevie J, looking for some green names only now. I see you, Susan, Virginia Beach. Not a green name. Eventually, one day you might be, but I'll get you in there. So Stevie J, Steve V, Kevin Weston, Will Hawkwood, Raz, Inza. Who else do we have for green names here? Joel Clark, Jay with the gold cash bag, Bluefish Aquarium, Jay Hicks. And as I get lower through the list, less and less of them. We've got Kurt, Mr. Oso as well, longtime viewer, Kay. So those guys get, they get, what would you say, honorable shout outs there. Sharon J, and Joe G, down towards the bottom here. All right, so if you want to shout out, get here sooner, say something sooner in the chat. I'll probably get you if you're up towards the top. Otherwise, green names always get mentioned. Let's see what we've got going on from a 4-hour trend perspective here on our ES. We'll go front and center and give ourselves a nice little zoom here. Overall, here was the prior uptrend that is now broken because we've got lows and lower lows. And hallelujah, the market finally started to produce a little bit of a more meaningful 4-hour lower high, right? This is, I think I titled the video something about the lower high or the counter trend rally. Can't even remember. But what we're looking at is this being a meaningful, or the start of a meaningful lower high that the 4-hour can find, which is fantastic. It's really, really difficult to trade a market that's moving down in a straight, vertical line. You just kind of jump in and have to, maybe use the high of day as a stop, a quick 5-minute pop as a stop. Very, very tough to find a meaningful entry on that type of price action. So I like what I'm seeing here on the 4-hour. We've got highs, lower highs, we've got lows, obviously lower lows along the way, and searching for this lower high. Now, a couple of places that it could start to show up. Number one would be right here. Let's actually go to the hourly chart to start to hone in on this zone. And we'll go extended hours off so I can show you the most important price action, right? So a couple of places where this 4-hour lower high might start to develop would be right here, right? That's 3,900. 3,900 in your ES seems like a reasonable place based on prior rejections. Lack of gap close, remember, that's from in here. This is the November CPI reading. We've, of course, closed it now. But on the original interaction, this lower wick represents lack of gap fill. We move away from it. So it strikes me as a reasonable place where the market's got some history. We also know that we had last Thursday and Friday an interaction there as well. We gapped down on Friday. In the futures, we closed the gap. I get it. In the SPY, we did not. SPY did not close that gap. SPX did not close that gap, but the futures did. And we've got that 3,900. So 3,900 is top of mind as a place for a possible rejection and rollover. That's a 9, not a 4. Right here, right? So if the market continues to move higher, the overnight high is just shy of it. Boom. When and if we get there, I would be looking for reversals. And okay, if we break that one, obviously it's all about the bottom of this overall balance right here. So you've got lows, 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 break, retest, possibly head lower off of it. All right, and that number would be much closer to, as we know, 39.65. 39.65 on that level right there. All right, so that's your hourly. Let's go ahead and throw those after-hour sessions back on, though, just so we can start talking about where we're trading currently. So in terms of the hourly, you know, if we look at this isolated segment of price action here, we know that we've got high, lower high. You know, you could classify this as a lower high. This is kind of getting into the territory of equal-ish high. If we move here, certainly starts to become more of an equal high here to here. Remember, though, that this is including the after-hours data. So I would want to see here that would become equal to this primarily. Again, that's 3,900. And then it's, okay, does the hourly pull back and form a higher low, higher high? All right, if that happens, you shouldn't really look for the big short until we make the move possibly up to 39.65. Oops, 39.65, which is here, right? So something that does this, 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 then it's game on. That's where I would look for the short. If we go higher low instead of big breakdown of this area, right? And the only way we'll know that is if we'll go to the 15-minute chart. Think about your onion. We're peeling back the layers here. The only way we'll know that is, you know, kind of depending on this zone right here, in my estimation, right? So the way I would look at this chart going forward is, let me go ahead and move this higher a bit so we can see that 3,900 zone. Good, good. All right, so we're expecting a little bit of follow through. We're opening on a gap up, so gap rules will be in play. We'll talk about gap rules momentarily, but we will learn something about the market really at the prior high of day. So rally first, rejection out of this 3,900 zone that moves lower. Do we close the gap and reverse off of it? That's for the possible hourly higher low, in which case we're looking for that higher target 39.65 on the bigger short for the ES. Or if we close the gap and get acceptance in the prior day's range underneath this here, okay, this is your 4-hour lower high, right? Oops, yeah, 4H, LH. All right, so that's how I would kind of think about today's 15-minute chart and today's hourly chart in conjunction. Apologies. 1 second. Sip of water here. There we go. Much better. I would be thinking about it like that. So 15-minute would suggest that there's the possibility of running into this 3,900. There's also the possibility of just getting a gap fill and then reversing off of it. So you will learn something either way on today's session. The numbers that I would be focused on, just knowing what we know about these two time frame trends, is 3,900 as well as the prior high of day, 38.6650. 38.6650. 3,900, 38.6650. You've got a, what would that be? 34-point range to be playing around in. All right, 34-point range. Pretty big. So with that said, let's ask ourselves the 3 questions, get down to business. 1, where are we opening in relationship to the prior day's range? Here's the prior day's high. Here's the prior day's low. We are opening outside of the prior day's range on a true gap up this morning. Nice. It's very, that's contrary to what we've been getting the past couple of days, week even, which has just been seemingly hammer it lower, 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 lower. And now we're finally getting this counter trend move, hence the title of today's video. So very pleased about number 1 being a true gap up here. Gap rules will be in play. This does imply that shock and awe will be available on the open. We'll talk about what that means momentarily. Question number 2. Where are we opening from an overnight range perspective? Here's the overnight high. Here is the overnight low, way down here, right after the close from yesterday's session. And we're currently opening very, very, very close to the overnight high, which would, of course, suggest decent risk reward here on the opening print. We'll put an up arrow because we're opening close, but we know it's actually decent risk reward for a fade, a move in the opposite direction. Again, we will talk about gap rules momentarily. This aligns with gap rules working better as opposed to worse. Number 3, I don't know. I was about to draw a B here. I don't know. Let's go with the number 3 instead. Stick to the script. We've got the prior day settlement to calculate the overnight inventory. Are we net long, net short? What's the deal? We basically closed and have not looked back since. The overnight inventory is 100% net long, which would imply that, yes, whenever we're dealing with a gap, this is very meaningful. What does it imply? It means that the inventory could correct. Those folks who are getting longer and longer and longer up towards the top here, if we do not take out the overnight high and we trade lower through the opening print, we will look for that inventory to correct, which again is a possibility because we are opening on a true gap up. Number 1 offers some shock and awe. So with that said, let's go ahead and Nile the Crocodile. Nice to see you. I see that name out of the corner of my eye. With that said, let's go ahead and talk about the gap rules now. So we know that the 3 questions imply that gap rules are in play. But what are the gap rules? So for anyone who may not be familiar, let's go through them. When we're dealing with a true gap up, what we want to watch for on the open is any failure of the overnight high, again, gets these longs late to the party starting to panic. And if we can move back down through the opening print, now we've got trapped longs from the regular trading hour session, we've got trapped longs from the overnight session, and moving through the opening print should start to make these people close out. And if buyers are closing out, what do? They have to sell to close their long positions, which should imply some downward pressure for our ES. Remember, we just talked about this on the interpretation of the Tesla debacle and why people are arguing about whether or not prices should be going higher, lower, whatever. The equation's simple. When there are more sellers than there are buyers, prices will move lower. If there are more buyers than there are sellers, prices will move higher. If the longs feeling trapped here and the longs feeling trapped here add to the selling pressure, if you have skeptical shorts who recognize that we're in a 4-hour downtrend, in a daily downtrend, in a 1-hour downtrend, and they're like, all right, this is a gift. We got a gap up. Let's sell it, right? That's added selling pressure. Who's buying this market up here? Who is buying the market up here? Let me ask you it that way. Who's buying the market? Are you blindly going long on the open? Right? I don't think that would be wise. I'm not buying the market blindly on the open. Maybe someone out there is, and they think, hey, Santa's coming to town. I got to buy this market. But I think that they would be in the minority instead of the majority if we start failing underneath that opening print. Okay, so that's how this works. That's why this works from a psychological and positioning perspective. So just to reiterate, here's the opening print. If we fail to take out the overnight high, notice that I say we must, there's a couple of steps here that some people overlook. Number 1, we must fail the overnight high. If we are trading above the overnight high, there is no reason to be thinking that there are more sellers than buyers. If we fail the overnight high and move underneath it, that is an indication that there are more sellers than buyers. If we move under the opening print, it's an indication that there are more sellers than buyers. That's why, number 1, we must fail the overnight high, and number 2, we must move lower through the opening print. Lower through the opening print. That's what sets up the fade to close the gap, okay? So those 2 things must be true in order to be looking for the gap fill, right? Now, when and if we get to the prior high of day, that's where you would say if the hourly trend is going to flip higher, if we're going to find a higher low, this is where the buyers would want it to take place. So be mindful of a gap fill reversal, but because we're in an overall downtrend and the sentiment of the market right now is fairly negative, I don't know that I would just blindly buy the prior high of day as a long setup back in the upward direction. To me, it's certainly still valid as an outcome, as a scenario, but instead of just, typically, sometimes what you can do is you can just put a limit order here and pick up maybe, depending on the volatility, anywhere between 2 and 5 points in the ES, right? You just put a limit here. Maybe you put 2 of them in case it undercuts and then comes back out. And then you pick up your 2 to 5 points and you walk away and you're like, all right, great, gap fill reversal, fine, whatever. I wouldn't do that on a day like today. Maybe it's a different story if the internals are bright green and everything is just bullish across the board. Sectors are all up from the open. But I don't think the context of the market is right for doing that on a day like today. So instead, what I would do is I would do this, and then I would say, okay, if we can put in a double bottom here, high or low, maybe we're interested on the trend reversal over the neckline, right? Maybe we're interested on a head and shoulders pattern. Maybe we're interested on some sort of setup down here, but I wouldn't just have resting orders on the gap fill reversal on a day like today. All right, so primary objectives of the market, let's walk through them. The first thing that I would want to see the market do, the first objective that I think is reasonable to trade as a setup, would be gap fill and then watching for some kind of this to show if we're going to get a reversal. So that's number one. Number two objective would be gap fill, but something that does this, and that keeps the 4-hour downtrend kind of alive and well. We found our hourly lower high, 4-hour lower high. We're looking for lower after that. So that would be number two. And then the third outcome that's certainly possible, but less likely that I would want to trade this, would be we continue to run here on the open, pull back, and then get to that 39.65. 39.65. Right, that's the upper target way up there. That we want to see a lower high anywhere underneath that. And in this case, we're just getting a more significant 4-hour lower high, but I think it would be a little bit more difficult to trade that long through there. All right, so again, rank ordering what I personally think, and I'm not asking for poll results just yet, but for me, it would be number 1 is associated with this line, number 2 is associated with this line, and number 3 is associated with this line. And that's the rank order of what I think is most probable and sort of most tradable as well for today's session. Just taking off to the upside here may be a little bit difficult to get on board, knowing that the overall context of the market is bearish. If we get a nice clean, let's say, 15-minute bull flag here, again, market internals would have to be bright green. But a 15-minute bull flag up here, maybe that resolves higher. Maybe it's tradable for a scalp in the upward direction. But folks, we can't just flip our bias back to being bull as we're underneath that big major balance area that we just broke down from last week in the ES, right? There's got to be some structural shifts here. And I get it that there are lags to, identifying that the trend is actually flipping versus getting in on the trend, right? But you need that confirmation, especially in a volatile bear market, I would say, right? That's what gives me comfort and confirmation for sort of getting into or out of trades, right? Having that confirmation of the tailwinds, the overall trend working in your favor, that's what gives you the confidence to pull the trigger and say, okay, time to go long here, time to go short here. The trend's changing. I should be skeptical of shorts now. I should be skeptical of longs now, right? That's how it works. All right. So with all of that said, now let's take the official YouTube poll and see what the chat's thinking. What's going on? We just cracked and made a new overnight high. Let's go ahead and adjust that where it rightfully belongs. So if you are bullish on today's session, this is still a bull outcome, right? If we do something like this and then get here, basically bulls want to see either a full gap fill or a partial gap fill and then reverse out of it. And then we, let's say bulls want to see for situation number 1 today, a tag of 3,900. All right. If you're a little bit more neutral on today's session, you're still going to look for the gap fill, but instead lower high and then possibly dipping a toe in the prior day's range, sideways in here, really lacking trend, overlapping day, nothing all that impressive. Let's see a number 2 in the chat. And for all you bears, identify yourself. Just let us know. Let us know you're a bear. Something like this, lower highs. I would say a target for the bears is definitely the prior low of day. Prior low of day, that will constitute a situation number 3. All right, so those are the 3 results. If you think that it's going to be a combination of any of these, go ahead and drop a number dash a number. If you've got no clue what's going to unfold on this morning's session, the good old number 4 backdoor option is always available. All right, I'm going to type in the official clickable YouTube poll now with our animal options. So we'll go, what do you think? And we're just going animals, no number correlations. So let's see if you guys can identify what is what. Bull, newt, bear, and ostrich. All right, this is the first time we've gone animals only. Let's see what the farm. Let's see if the farm offers up any good insights. All right, I'm gonna let that simmer for about 5 seconds, and in the meantime, scroll up to the top of the chat to where we left off and see who else is here. The Sandman is in the building. Who else? Who else? Crypto Commando's in the building. Nice to see you. Warshawn, nice. Gregory Rulo, good morning, sir. And with that, we're into some poll results. So let's get down to business. Lots of 2s and 1s flowing in early, but that's usually how it happens because we talk about 1s and 2s sooner than the 3. Are we going to get that notorious flip? Big economic news today from Chris at 10 o'clock. Yeah, consumer confidence, it's pretty big. Be mindful at 10 o'clock, consumer confidence. We talked about that on the economic calendar. So that should be factored into your trading plan today, if you're going to trade early at least. Full-blown squeeze today from Empower. Strong number 1. Ross Muir with the number 1 as well. Still lots of 1s in the chat. We didn't get that notorious flip about halfway to 3s and 2s. Definitely seems more like people are feeling real bullish on today's session with this gap up here. Yeah, I don't know. It seems to me as though it probably, it's a shift in tone. Don't get me wrong. The market's oversold, but we're trying to find that lower high. I would not be looking for big bullish outcomes, like to change the daily trend, 4-hour trend on today's session. That it just doesn't strike me as being reasonable. Now, if the market does do something like that, and at 10 o'clock the consumer confidence numbers come out and the market rips 100 points in the upward direction, then pretty tough to trade short into that. But based on what we can see here in the pre-market, I would say that the favorable outcomes based on what I've drawn in here are probably a number two for today's session. Looking for some of the gap to fill and then just kind of doodling around in the prior day's range, or not really meaningfully aggressively trending higher. If we do trend higher aggressively, we know that 3,900 is on the table for shorts, and even further than that, 3,965. All right, 3,965. I got to get better at drawing 9s. This is a 9, not a 4. All right, let's take a look at the NQ. What's going on with the NQ? 4-hour time frame charts up first. What do we see on the 4-hour? Taking a quick zoom at the 4-hour. We know, and we don't want to beat the dead horse too much. That's not an option on our poll. Dead horse is not an option on the poll, but for now, we'll just beat it just a little bit. Just a little bit. Here's a balance range. Here's a balance range. Obviously, we've broken down. We're searching for that lower high that really forms anywhere underneath this 11,550. We're very far away from that, so this is an area of interest just like the ES. If we go on down to our 1-hour time frame chart, have a look at no extended hours on there, and you can see clear as day. There's your prior rejection. There's the top of the gap, right, from the November CPI read. A little bit of a, sideways catch there, if you will, in the, Thursday of last week. So it's not the cleanest area of rejection, but it could offer some resistance, noting that we're not quite there yet. If we have a look at our extended hours back on the hourly chart, zooming in on this price action, it's clear as day that this is a downtrend, no doubt about that. Lower lows, big lower lows on the NQ. You've also got kind of lower highs. Again, this is trying to become the more meaningful 1-hour lower high, 4-hour lower high as well. All right. So we know that there's a rejection spot up here. This would constitute a little bit of a counter trend move, looking to reposition for shorts here over time and do something like this. Okay, that's what we're looking for on the higher time frames, right? That's the higher time frame look. If we go through, this is the big short, right? Quote unquote, the big short. Bring out Michael Burry. No, in all seriousness, this is kind of the bottom of the balance range. So that's where I would expect, if the market's going to make it through this, which again, we don't know for sure, but if the market does move through this, this is the next place to be looking for that big lower high. Okay. So with that said, 15-minute chart, continuing down through the time frames. Let's extend this a little bit to the right. So bottom right, let's bump you forward a couple days. Good. All right. NQ, 15-minute time frame chart. Are we opening on a gap? No, we are not. A little bit of discrepancy here between what's going on in the ES and the NQ. What I think might be interesting is, well, actually, it's the wrong direction. It's the wrong direction. I was going to say maybe the ES and the SPY are trying to sync back up. Remember last Friday there was something that went on. Maybe it was the quad witch, but the price action diverged quite significantly in terms of SPY not filling that overhead gap. The ES futures did, and now they're out of sync a little bit, but it's the wrong direction. It would have had to be SPY either higher itself or ES lower itself, and that's not seemingly what we have. But anyways, that's a sidebar. NQ 15-minute time frame chart, lower, right? No gap up, opening inside the prior day's range. So this does not offer gap rules on the open. Instead, we would probably just be mindful of our overnight high and this general resistance zone right up here. right? We are opening high and tight. I'll give credit where credit is due. This is high and tight consolidation in the overnight session above, obviously, the bulk of the prior day's range here. So buyers definitely trying to do something. No gap being produced in the NQ, so gap rules, again, not in play. The way I would trade this on the open is probably being patient and seeing how these levels resolve, this zone. How does this zone resolve in the NQ? I know it's a large zone. I know it's annoying to just say, hey, watch out between 11,263 and 11,230. We're offering a 33-point range up there. 33 points? Yeah, 33 points. I know that's kind of like not all that helpful from a day trading perspective. Opening, what do I do? What do I do? What do I do? It's like, hey, take a chill pill, patience on the open. If we resolve this higher and the ES is holding its gap, you're probably looking for longs into that resistance area that we just pointed out, right? That's up here, 11,350. If we don't do anything impressive here, maybe it's this, and we just chop into the value area, look for your ES gap to fill. Look for this to rotate to the bottom of the value area, right? Value area rotation. You get this right here to trade through. And, even worse would be breaking underneath value area low. It would be giving up this low. It would be giving up this low. Maybe there's something here, but really the biggest structure, based on volume at least, is coming from your low of yesterday's session. That's the bear case, okay? So watch your NQ zone overhead. It's really all about what happens with this right here. Can we resolve this higher? Higher low, okay, fine. ES probably stays strong and makes the rip into maybe 39.65. Or this and this, gap fade, ES, okay? That's how I would look at the two, and that's how I would use the divergence between the two. That's the NQ on the open here. Again, opening closer to value area. I think patience is the play in the NQ. Does not strike me as being as obvious as the ES. The ES is all about the gap. All right, Russell, last but not least in the broad market for our futures. I don't know why I always zoom in on the 15-minute time frame chart if I'm just going to readjust to the 4-hour. 4-hour here was showing us a bearish channel first, right? So there's your bearish channel. Obviously, we're firmly underneath that bearish channel. And this is certainly looking much, much better for finding that 4-hour lower high. Apologies, something going on with the sinuses this morning. Anyways, this is certainly more promising look for that lower high. Because it's clearly rallying a bit here, and this straight down look is no longer. And just like that, on time, we've got our bot in the chat. Let's go ahead and delete / ban that guy. Guy, gal, I don't know. Bot. Doesn't have a gender. Anyways, Russell looking for the lower high, okay? And it's certainly starting to present itself. Now, we're attempting to get to this zone of the chart. So we're right at the place where we should start to see some rejection in the Russell based on prior support, rejection, within spitting distance from this support as well. So let's go to the hourly, knowing what we know about the 4-hour. So we've got a little bit of a counter trend move developing here, but it's right into a known area of resistance. After hours off, clear as day. Look at this level. Resistance, support, resistance, right? Beautiful. We're going to be running right into that on the open. Do we roll over and do something like this? That keeps your 4-hour lower high intact. In terms of the hourly with extended hours on, so we can see the sort of push and pull here. The dynamic's been a little bit cleaner in the Russell with lower high here. This is kind of a lower high, but remember it's an after hours lower high. This is still a lower high from here to here. Now the question becomes, do we produce a regular trading hour session lower high? That's what we want to see. That's what we were just discussing when the after hours data was off. Okay, so this is that zone, 1780, looking for sharp rejection. That's the combination word. Remember, my brain is my brain is thinking 2 steps ahead of what my mouth is saying, and when I try to combine words like reject / resist, we get things like and I stumble through it. But you get the point, and the chat understands exactly what I'm trying to say because you guys can read my mind. You've been tuning in for so long. You've been fans of the channel for so long. You just instantly know what I'm going to say. So 1780 is that rejection place, which I would expect a sharp move away from on today's session. If we break through it, then again, the market's like giving us these wishy-washy signals. Maybe we get more of a dead cat bounce. I don't really think the market wants to do something like that, especially considering, the downtrend that has been formed here. But I suppose, right, If we do something like this, maybe inverted head and shoulders takes us back to the 1820 back test, right? For something that does this in the future. But that's, again, it doesn't seem as though anybody's all, in terms of the market participants out there right now, I'm not seeing the case for just everybody to run out and be like, I'm going to go and buy the market with both hands ahead of the holiday season in the face of this big news slump that's been coming along in the market. And I could be completely wrong about that, guys. I could be absolutely 100% wrong about that, but I'm not seeing the evidence out there from a market perspective. I suppose so. We get the objective of the Russell, right? We're looking for rejection here, back down into the prior day's range. That keeps this bearish as well. But let me show you this. Let's go to the internal screen. And yesterday's session was the only bullish day that we've had in a long time. It was the only bullish day in a long time. Look at what the internals did yesterday. Internals here on the volume read, no big inflows into the market. That's not, nothing impressive there. Not new money buying. If anything, just a little bit of short covering that we discussed from yesterday's pre-market prep, right? Look at the tick. A little bit of short covering on the open. We get above the zero line for a brief stint, and then what happens? It's barcode the rest of the day. Nothing going on here. Not big new money buying. What did the advanced decline line do? It opens negative, right? It rallies a bit, but it stalls out right around zero, right? It's not like we made an attempt to get and stay up in trend zone. So again, the evidence, at least that I'm seeing, is not supportive or indicative of people running out into the market and buying it with both hands and holding this thing into the beginning of next year, right? You're going to get some tax loss harvesting. We're coming into like the final window for that to be available, right? You're going to get tax loss harvesting selling. You're going to get, and which should be quite a bit this year considering the market's down, right? You're going to get a lot of people selling off positions because of that. It seasonally, I know it's like, hey, Christmas, Santa rally, all this good stuff, but not in this context. Not in this context. I'm not seeing it. So hopefully that was insightful to look through the ES and the internals here, and just, not be overly bullish because of this gap based on what the internals are showing us. There's just new money buyers just not being aggressive here, okay? So let us see. Next up is the look at our cash ETFs. What's going on with the SPY? So are we back in sync with the ES? No. No. In terms of levels that I would be paying attention to, it's the same idea. It's the gap fill reversal that we want to be mindful of. Guys, tell me when this is overlapping and when I've got more screen real estate. That's better. All right, SPY, right? Rejecting the overnight high, 384. As long as we are underneath 384, you are looking for continuation moves to close the gap. And just like in the ES, you want to watch and see what the reaction is on the gap fill reversal. 382. 382 would be the level. Okay, so 382, if we bounce off of it, all right, maybe we're searching for the lower high off of this. And that's kind of, what goes on there. Otherwise, just looking for chop through this. As and if we accept into the prior day's range, that would satisfy our lower high on the daily, right? Opening somewhere in here, maybe we wick it a little bit and then do this. All right, boom, lower high, continuation. All right, so SPY, not out of the woods yet from a trend perspective. That's obvious. Same thing with the Qs. Same thing with, actually, hang on a second. Where are we? I just want to see where we're at in relationship to the expected move here this week. And we're obviously still firmly within it, and we're not threatening an overextension through the bottom. All right, so not as concerned there, but look at the QQQ bouncing off of the lower edge of the weekly expected move. Remember that this does not explicitly act as support or resistance. It's just a recommendation as to where the market's most comfortable, and we're staying in that range currently. But note that if we break down the prior low of day, we're starting to extend through it. So again, new money shorts on these lows, not ideal. Not ideal. It would be better for the Qs to do this and then roll over off of a more meaningful lower high, possibly rejecting this area here, right? So no gap in the Qs, just like we talked about in the NQ. You want to watch your overnight high and your prior high of day. I would use 271.50. 271.5 in your QQQ is the number to beat. If we beat it on the upside, look for a little bit more of a bullish run and a rejection possibly off of this area here. That is the equivalent of the, what did we say, 11,350 was it in the NQs? You get the idea, right? It's the prior CPI gap low. It's where we saw that rejection from in here, right? We know that level. So that's the equivalent in the QQQ. And if we do not beat 271.5 chop / possibly looking for continued bearish action, but be skeptical of new money shorts on the lows, right? IWM, Russell 2000 small caps. What's up with these smalls? You can see that we are not approaching the lower edge of the weekly expected move. A little bit more meaningful of a gap up here. So watching for the gap fill reversal possibly. Where are we? 173.60, right around here. Russell could be something to watch here today, guys. I would say Russell has a possibility of actually, I don't want to call it a breakout, but a stronger counter trend move could be possible in IWM. Just based on structure breaking. Again, we just saw in the market internals that buyers aren't rushing out and buying the market with both hands. But look at the Russell IWM, at least daily time frame chart in the bars here. If we close the gap and reverse off of it and then start looking at these 2-bar highs right here, a break of that gets you up to that higher level in the in the Russell, right? And that's 177 in the IWM, the cash ETF. That might be a little bit of a hang up for the market. All right, so something I would watch very closely on the open. We talked about the NQES divergence, gap versus no gap. But the IWM divergence that you would want to pay attention to here, remembering that IWM has been acting as our market leader, would be, okay, first up, gap fill reversal, step number 1 complete. Probably don't want to be looking for big new money shorts if the IWM gap fill reverses and let's say the QQQ breaks the prior high of day. All right, so that's situation number 1. But after that, these two equal highs, they've got like a menacing look. They're staring at me. They're saying, hey, don't forget about us. Do not forget about us, because if we break, the floodgates are open for a little bit of buying into 177. Real menacing look here on the chart. So I would carry that forward. I wouldn't say that it's a high probability outcome. I wouldn't say that, gap fill reversal, break of this, and then rip into 177 is like really top tier in terms of things I'm expecting on the open. But it's in the back of my head as a little haunting voice. Again, menacing look on those two candle highs right here. Okay, so I would watch that as a back pocket situation for the market today. All right, that's it for the broad market. Let's take a look at Apple. What's going on with AAPL? Apple made the move to 130. That was a known area of support, right? So 130 achieved, a little bit of a bounce off of it. Again, markets fairly rarely, let's add that one to the rhyme book, move in a straight line. So a little bit of dead cat bounce here, absolutely 100% A-okay, and it's not going to change the trend. Really, Apple's got plenty of runway. Even if it does move higher, we could go to 140 and still be putting in a lower high on the daily time frame, right? Here to here. So I'm not concerned about the trend changing in Apple. I do think we should be open to bullish outcomes over this clear area of rejection. So resistance, overnight high, break that. Move through this thin structure of the red bar here, and we've got the move back into, 134.85. So just a retest of the flush from this, equal low breakdown here. So support, kind of stalled on it one day, but again, just cracking this is a scalp into there, right? That should be fairly clear. Higher lows along the way, market's fairly oversold. Seems like a reasonable outcome in Apple for the morning session, all right? If it doesn't do the deal, and maybe does this, chops through here, again, not looking to be aggressive on new money shorts. It's got to put in a bear flag. It's got to put in a lower high. It's got to do something. Chasing new money shorts continuously down here, really, really risky, right? You are going to be the sucker, the chump, who gets squeezed out on the dead cat bounce, and we will be saying, oh, thank you. Thanks for fueling the market rally or the squeeze higher. Appreciate it. Thanks for the $100 bill, $50 bill, whatever the trade ends up being per contract, right? Don't be the sucker. Don't be the sucker down here, okay? Next up, Netflix. It's dog eat dog world out there. You guys know that. Netflix gap down yesterday. It did the deal, closed the gap. Remember that this was really this sucked. I wanted that 3-bar play. You guys know that. Didn't unfold. Now we're chopping back around in this little balance range from here. I don't see anything obvious for Netflix on the open. 288 will continue to be a line in the sand, obviously accepting above, neutral through this, choppy, breaking back down underneath. It's all about watching the breakdown of 286 for this, right? Move through the zero structure from the gap fill, the rip higher on the open, and 277 becomes the target here, equal low on the daily. All right, so Netflix is not obvious to me as to what to do on the open. That's a patience play. Apple's looking much better for a breakout even. Tesla continues to just absolutely go in the gutter. No one wants to touch Tesla. It's the untouchable stock now, which is ironic because you're getting some really big media personalities who are like, "Hey, you guys will know exactly who I'm talking about. But hey, we just launched an ETF, and the biggest holding is Tesla. You guys should go out and buy it because CPI and inflation is going to end soon, and everything's going to be merry. Tesla's going to go back to 1,000." And while very may well be a decent entry point, let's not forget, buying when there's panic is certainly a decent strategy if you've got a long enough time horizon, but the company has to be strong, right? It's just not, I don't see a reason to be a buyer yet. It's got to produce higher lows. It's got to change. I mean, look at this weekly chart, guys. Look at this weekly chart. Let's go full screen. Let's show the full damage that's been done here. This is, come on. Does this chart look like a buy to you? No, it does not look like a buy to anybody yet. If it starts to put in a bottoming formation here, weekly double bottom, say it does this, weekly inverted head and shoulders to undo the head and shoulders from here, maybe it's interesting, right? Tesla, I don't think it's the end of Tesla. Tesla's probably not going anywhere. I might eat my words if Elon Musk blows the company up in the next 6 months or something like that. But personally, I don't think it's going anywhere. But just, a little bit of patience here, a little bit of resolve. It doesn't need to just be buy as this thing's going into the oblivion, right? The trend is so clearly down. So Tesla, not having it. Not having it. Yeah, you guys know. You guys know the deal. Let's go back to the dailies and the setup with the after hours here. Okay, so we know Tesla's probably a no touch on the open. Does it rebound and snap for a little bit of a dead cat bounce? It could, but really, any lower highs under 155, just continuing the slump here, big daily lower highs in place. The chart just doesn't have it going on currently. And this acceptance towards the lows where the NQ is, flirting with this, ES is gapping up, Russell's gapping up. It's not the place, I don't think, to be looking for longs. Even if it does rip, again, the odds, the probabilities, to me, not worth it. So, anyways, Google, what's up with Google? Anything tradable going on here? Not quite. Coming off of the gap up, opening inside the prior day's range, which is overlapping here. I would say Google is probably trying to resolve a dead cat bounce. So if anything, maybe just watch over 89.50. Over 89.50 might be interesting for a bit of a pop. Achieve the Monday high of day here as target, 90.40. It's in no man's land, don't get me wrong through this, but this for a lower high, sure. I could see that on Google. If it just stays in the range, I would just start watching for bear flag. Right, bear flag, maybe 2 or 3 days of consolidation, then continued breakdown gets interesting. All right, so Google, nothing obvious. I'd say Apple is still a top contender for the open on watch. Metaverse, tricky. Staying in this range. What's that song? Something about staying alive? Someone sing it in the chat to me. Staying alive. Right? It's staying alive. It's staying in this balance area. It's just being annoying. This is interesting. This is interesting. This is interesting here. Playing around in there, not interested. My broker, Rinky Dink Brokers, says that the U.S. markets are closed on the 26th. Rinky Dink Brokers, gotta love it, INF, man. Seriously, dude, I am so glad you found the channel. Your comments make me laugh every single time. We've got similar senses of humor. I think that's hilarious. Rinky Dink Brokers. Oh my goodness. All right, moving along. NVIDIA. What's going on with NVIDIA? What did we do at the trend line yesterday? We broke it. We got some acceptance underneath it. What's the look? Close the triangle, right? There's your triangle here. Go back to math class. 90-degree right angle. So I would watch very closely as to how we resolve this. It's very compressed range yesterday. That's basically the indication of the doji, right? We've got a long lower wick, a long upper wick. We settled right in the middle, and that's not, we're not opening smack in the middle, but fairly close. We're still just opening inside of this indecisive doji, so you'll learn something about NVIDIA under the lower, over the high. Personally, I would think that on a breakdown of that trend line here, it should do this. So I would just set some alerts for number one here, and then number 2, the low. Just note that there's no structure in that lower wick, right? No structure there. So under 160 starts to get interesting for the bears inside of NVIDIA. Under 160. All right, 160 alerts for bears in NVIDIA. If it stays alive, if it's staying alive like Meta, whatever, not interested. Possibly re-interested on the lower high against 169.50, right? Something that does this into the future, then you build out your head and shoulders. It's pretty underneath the trend line, all that good stuff. So for now, on today's open 160, if it does start to rally, 169.50. Next up, Microsoft. What's going on with Softy? Dead cat bounce, perfect off the bottom of the range. Fantastic. Beautiful. Love to see it. Over 243 continues the dead cat, looking for a lower high anywhere underneath 247.75. All right. Boom. Something that comes down. All right. What's up with this? Adam, dude, I'm going to give you one chance. You did this yesterday. You've been talking about robot trading is fun, reversal strategy rocks. That's it. No more mentions of that, all right? No more mentions of that. Very bot-esque type behavior, and that does not get tolerated around here, all right? So, Microsoft, watching over the highs, 243 to continue the dead cat bounce, all right? That is that. Next up, Amazon. What is up with Amazon? Amazonian. What's up here? Amazon. All right, balance range breaking down. We know that. Looking for the lower highs underneath 87.75. And what do we see in terms of trade setup on the open? Failed to go lower yesterday. So we did undercut the low by a little bit. And then we closed, not strong by any stretch of the imagination, but certainly over that. Flirting with this breakout point here. So I would watch Amazon just over the high of the prior day for a retest of 87.75. That could happen in a split second. I mean, quite honestly, on the first 5-minute bar, we could easily get there, and it might be difficult to trade. If we do consolidate and do something a little bit more respectful on the open and then break, that's tradable. Otherwise, just looking for what the reaction is up here if the market gets there in like the blink of an eye, right? We're talking about a pretty small range. What is that? $1.50, $1.25 or something like that. So it's very doable for that to be in the blink of an eye on the open. And then I would just watch, do we accept back in the range at 87.75 or do we roll over? All right, so that is the inflection point in Amazon. I would say based on, again, the overall conviction of the market slumping and people not really going out buying it with both hands, as we've been saying, it would seem as though Amazon might want to reject off of that for a lower high. That's what I would be interested in to look for. All right. So that's going to do it for the pre-market stream. Let's go ahead and just put up the ES futures, and I'll briefly run through the chat and see if we've got any questions, comments, concerns here in the last couple of minutes here. All right. What else? Some good coffee today. Yeah, John, you're not wrong. What else? Yes, there we go. Crypto Commando singing the rest of it. Well, you can tell by the way so on and so forth. I'm not going to sing on stream. I don't have a good voice. 100, thanks for tuning in. James F. Kirk says, what trades do you have conviction on today as of right now? Anything. Thanks. I mean, in terms of conviction, I sort of walked through my thoughts on the ES. My highest, like what I'll be watching on the open for specifically is the gap fill on the ES, right? That is what I will be watching for on the open. I always... Remember, you can't pick and choose when to apply the gap rules. It's every time there's a gap, you apply the gap rules. Because we're a little bit lower here, the risk reward isn't as good, right? The risk reward is not as good. That's like maybe a 1-to-1, 1.5-to-1. So I would want to see either a really minor rally that rejects well underneath the overnight high, or something that goes up here and then offers a cleaner lower high breakdown or some trend reversal there. Might take a stab at it higher, even if we're above the opening print. And I know that goes against rule number 2 that we just discussed earlier. But when you've got the screen time under your belt, when you kind of understand how markets work, right, you can break and bend the rules just a little bit, right? We're not completely breaking the rules because we need to see the failure of the overnight high. But if we get a trend that starts developing down up here, that would be a good first step. All right, starter position maybe, cross through the open, add to it a bit, and then look for the gap fill. All right, so that's kind of my high conviction what to watch on the open. Other than that, if you're watching individual companies only, I would say Apple break over this high. Apple because it's one of the most liquid names and it's one of the strong resilient names, right? This is the darling of the market. If anything's going to get love, it should be Apple, and you're just going to watch over that high. Okay, so those are the 2 high conviction things that I have on the open. Apple and ES. All right? That is that. Okay. Yeah, robo trading is lame. All right, that's going to wrap it up. Appreciate everybody tuning in. Thank you so much for being here. If you're not in the Discord already, get in the Discord. It's where we chat back and forth as the market's open. We've got plenty of other knowledgeable folks in there as well, offering up opinions. Shout out to Contrary Trader. I don't know if he watches the streams, but man, he's great. He's great. So get in there, hang out with us. And with that said, everybody, I wish you a green trading day, and I will see you in the next one.